So let me just ask you quickly about, before we get to some more substance, I'm seeing some headlines on the tape right now from St. Louis Fed President Bullard, who says the U.S. can have a V-shaped recovery if the virus is handled well. Does that make sense to you? Because, you know, when you were with us last week, we had a bit of a debate on what this recovery was going to look like. You were in the more slow and non-V-shaped camp. Now, given where we are a week later, how the stock market has responded since then, how we're now having a conversation about getting back to work, what do you think about Bullard's comments, and how are you feeling it on your own?
Look, I hope he's right. I don't think he is, so I apologize for that. The whole key is how quickly, do people come back? That's great, but then how quickly do we get back to normal? I just think that's going to take a while. I'm sorry. And I don't think, a company that was making, whatever, if it had $1 million of EBITDA, all of a sudden 6 months from now still has that $1 million of EBITDA. I think it's going to take a while for all these things to get back to normal. And I think people are just a little bit too optimistic. I mean, I'd love it to do well, but I think it's just going to take a little bit longer.
What about the idea that the Fed, just to play off of Bullard, given the seat in which he sits, has backstopped everything for the most part? The Fed and the Treasury have backstopped this whole thing. So do you at least believe that a floor, so to speak, has been put in to where we are? Not necessarily just from a bottom in the stock market, but just generally speaking, that the actions that all of those entities have taken is game-changing.
That I fully agree with. I think what the Fed has done, and I know everybody keeps talking about it, is unprecedented. It is. And I think it has put a floor, and it's made people feel comfortable to end up getting back in the market, to invest, and has given people the confidence to get out there and invest that money. So I think that's all positive. But I still think it's going to take a while.
Yeah, I think a lot of people are in agreement with you for certain. Stay with me for a second. Let's bring Steve Leisman in, because these headlines from Bullard, Mark, were just hitting just as we were bringing you in, and I'd love to get Steve's insight. Steve, it may be out of consensus at this point to have this idea from Bullard of a V-shaped recovery. Certainly, if you heard, Neil Kashkari over the weekend, you could put those on opposite sides of how this is going to potentially work. Why don't you put into perspective what Bullard is telling us today?
Yeah, well, so you have to understand what he's saying, how we would get to a V-shaped recovery. He says it's possible, but it depends on how we conduct ourselves. And I think it's important to go through the kind of economic calculus that Bullard is making. Let's begin with this. He says shutting down the U.S. economy is costing the U.S. $25 billion a day in lost output. Put that to the side. Put next to that what he thinks we need to bring America back, which is massive, widespread availability of testing. He says testing for businesses, testing for government, testing for individual households. He says, you know what? Whatever that costs, it will be some magnitude less than the $25 billion a day that it's costing us in less output. So he wants the U.S. to spend massively on the kind of testing. He used this phrase, Scott, that I think is worth thinking about from an economics point of view. He says quarantining is a massively inefficient way to go about solving your problem. He understands it's necessary for saving lives and keeping people healthy, but he goes, you know what? We're keeping tens of millions of healthy people at home. Well, how do we solve that problem? His idea is we could get to this place of a V-shaped recovery, get back to where we need to be with this massive testing thing. That's his whole, not his whole thing, but that's the gist of what he's saying, is making an economic cost-benefit analysis of what we lose in the economy versus what we ought to be spending on testing.
Mark, how are you thinking about the idea of reopening the Avenue offices in New York City? What kind of time frame makes sense to you, and the idea that testing is going to be key to everything moving forward?
Well, I think Bullard's right about that. You do need the testing. So we'd love to get back into our offices in the next 30 days. But to go do that, for somebody to sit next to somebody, you're going to want to know that they're fine. So he's correct. If it's easy to test somebody, then people aren't going to be worried. But I don't see any of that testing around. Everybody keeps talking that it's coming. I hope it is. But until you have that and until you have it everywhere, it's going to be hard for people to get back. But he's absolutely correct. We should be spending all the money that we can right now to have that, because if we are losing $25 billion a day, to create the testing is going to be substantially cheaper than that.
For sure. Steve, I want you to stay with us, because now I want to talk to you, Mark, about this idea of the Fed buying high-yield ETFs, which was an extraordinary move. And as you said, the word unprecedented has been used so many times in the last month to 6 weeks. It's probably been overused, but it's hard to miss using that word on this. I'm wondering how you, given what you do for a living, think about that move. There are some who suggest that there was moral hazard that was just disregarded altogether. Just tell me how you think about what the Fed did.
I think the reason the Fed did that was to continue providing liquidity. That's really it. What the Fed is trying to do is make people comfortable that the markets are liquid and that you can come in and you can trade. That's the most important thing, and I think that's what they did. Now, within that high-yield market, it's close to about $2 trillion. We think you're going to have somewhere around sort of a 10, 15% default rate. That's okay. You're going to have companies that are going to have issues. We'll take advantage of that. But what the Fed is doing is providing liquidity, which is what everybody needs and makes people feel comfortable.
Is it creating, and will it create, fewer opportunities for somebody like you?
It'll be less, because the amount of liquidity that's been injected in the system has actually been, look, to be perfectly honest, it's great for the country. It's great for the economy. You need that.
Yep.
You need that, so that's the positive. I think you spoke about it before. When you have something like this, you're trying to make sure people don't get hurt. But you are going to have people who are going to get hurt, and that's because they had too much leverage. So I think for someone like us, we'll be able to end up taking advantage of that over the course of the next 3 months.
Yeah. How about China? So, now that China is getting back to work, at least attempting to, how does your business there look today?
I think it looks pretty good. It's the same thing. People need capital, so you're still able to charge quite a bit for the capital that you have. But it's coming back. It's coming back slowly. So the good news is it's coming back. The bad news is it's coming back slowly.
But your lending business that you had pre-crisis, you see an uptick in opportunity there, just given the economic issues that existed in China and where they are now as companies try and get back up and get going again?
Yeah, it's been a massive uptick. There's just everybody needs capital. So I think that's all been very, very positive. Because if you had money and if you have money out there, you can pretty much, you can charge somewhere around sort of 15 to 20% for the use of that capital.